me.
Hey guys, have you ever felt that the market is a mysterious game where only traders with superpowers can master it? What if there is a simple, a very simple truth about timing the market that you could learn today? So stay with us because we're going to be covering that. Hi, I'm Dennis Wilborn from AutoPilot Trader, and I'm joined by our co-host Mike Lamoth, somewhere traveling again this week. Where are you guys at right now, Mike?
I think we're in Maryland.
Almost at the Delaware border.
Almost at the Delaware border.
Delaware.
There's Melissa.
Hi, Melissa. And so Melissa was such a great contributor last week. She was kind of like our hostage, or our guest, because she was driving for us last week. And then very shortly, did a great job. And very shortly, we're going to introduce our special guest, which is Shawn Vincent. And we're going to be talking about our subject today is the truth about market timing, how to get it right, but also we're going to talk about a couple of those other myths that are number one on Shawn's heart. Shawn, just say hi to us this morning. Good morning.
Hey, everybody. Thanks for having me here.
And so, hey, before we jump into that session with Shawn, I want to take a look at a couple of different things. One is, let me bop over here really quick. There we go. Hey, this is a chart of the S&P. Remember last Friday, the market rallied and we were all excited and happy and all this type of stuff. However, look what's happening. We rallied into what was and I'll show you right here on the chart. I hope you can see it. Is right here. That candlestick from last Thursday is a bearish engulfing pattern on the S&P, followed by an inside day, which could be considered a harami. And now today we got a little bit of a pop up, but now we're selling off. If we continue to sell off past the open on Friday, we will have another bearish engulfing. What's that telling me about the market? Well, it's basically the short-lived news cycle with the Fed going to lower the rates. Maybe not that exciting. Well, we'll see. I'm looking this week for a pullback, at least the 8-week moving average, which is that line right there. The other item that we want to take a look at, so like I said, I'm looking for a pullback on the S&P and the NASDAQ. The Russell remains the strongest index right now. And then everybody is waiting for blah, 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 blah. NVIDIA reports earnings this week. Now, if you already own NVIDIA, I only caution you a couple of things. One is make sure you're up more than 10%. And what I do on my charts is I lay in because stocks typically run between plus or minus 10% on average after earnings. And so that gives us an upside target on NVIDIA of about 139. And look to your left. That's right in line with a past level of resistance. Now, if we pop above that, that's a breakout. That could be huge for NVIDIA. Downside, negative 10%, takes us down to about 116.92. So, Shawn Mike, what's your thoughts about both the Fed's interest rates and NVIDIA? You going to do anything right now?
My first thought is that if you didn't tell me that those were two different charts, I might not have caught on it. Both charts, the Qs and NVIDIA, look very, very similar right now, although that right side, the far right side of NVIDIA, it looks like it's built a shelf. So it almost not like a handle. I would say that both charts, both the Qs and NVIDIA, to me, they look like a double bottom. And, well, what I would hope for the Qs, right, because I'm still away. I'm on my way back home right now, and I haven't been trading while I was on vacation. But if a handle does build out on the Qs, that gives me a nice opportunity to get in. The reason why is because it Well, when it makes these handles or these tighter consolidations, it gives a very nice spot to pick. Where am I going to get in? Where am I going to cut out if things don't go my way? Right. So if prices break out, then I'll get in on the breakout. If prices then fall back through the floor, then that's telling me, okay, you know what? Somebody forgot to pour the concrete. I'm gonna bow out of this one. But
Yeah,
it looks like that's what's happening on NVIDIA. NVIDIA reports tonight, right?
NVIDIA reports after hours on the 28th.
Yeah. Well, what's today?
It'll be Wednesday.
It'll be Wednesday. Thank you, Shawn.
Wednesday. Okay. Yeah. So it looks like we've got a little bit of time.
And so, we've got a little bit of time. And did you know that one of the things that a lot of people don't realize that these kind of horizontal flags like that, where basically you've got a good range-bound flag, the horizontal flags are actually the strongest kind of flags, technically, for a potential breakout. They're stronger than the flags that kind of tilt down like a pennant. And so just keep that in mind.
Interesting. Do you know the reason why that is, Dennis?
It basically, what it's doing is it's basically the profit takers do not have as much control as it does when it's slanting down. Where it's slanting down, the profit takers are really in charge and they're pulling the prices back. And up here, you're getting some selling, some profit taking. So that's why it's a very positive indication that, oh, okay, this is cool. This typically means we're going to go busting up. Now, that is valid if we're above the 50-day moving, and well, especially the 50-day moving average. And so, anyway, so that's what we've got going on in NVIDIA. That's what we've got going on with the S&P and the Q. Any comments, Shawn, from your side, taking a look at this?
Yeah, I think what I would add is that it's great to look at these things in isolation, but I've got these things in a portfolio, and they're about 30% of the portfolio, right? And I got back in them after we crossed the downward trend line and had our follow through day a couple of weeks ago. So they're new positions. I don't have that 10% that you've talked about, but when I look at the other 70% of the portfolio, which has some insurance stuff and some financial stuff and the mid cap and small cap ETFs, they're doing pretty well, and the interest rate stuff that we're looking forward to may benefit those. So in the end, I've got my stop set to where I've only got 0.5% of my entire portfolio at risk right now. And so my look at NVIDIA and the Qs and everything is I've checked my stops. They're exactly where I want them. If it farts out this week, then I'm out less than 0.5% of my portfolio, and then I've got that capital free to look at these other areas of strength that are coming. But on the other hand, if NVIDIA has big earnings and reports and the market likes it and brings everything else up, then I haven't given up the ghost today.
Okay.
I know where I'm at,
And so we got that. And guys, if you're joining us live, let me know, because we wanted to add in a little bit of a flair on the Trading Truths podcast that would also give you some ideas of what we're looking at from the indexes and stocks that are moving the markets right now. And NVIDIA is certainly one of those stocks that's moving the market. But enough about that. Right now, we're going to jump over and start picking on Shawn. And so, Shawn has a video podcast called the Right of the Chart, and both Mike and I have been on that podcast with Shawn. It was really a kick, and some of the prevalent myths that he wants to talk about. Shawn brings an exceptionally fresh perspective to what we're going to be talking about today, because he's a newer trader. And so the obstacles are fresh in his mind that newer traders go through. And Shawn, before we jump into the first myth, just want, can you tell us a little bit about yourself? 'Cause I know you work with Adam Sarhan.
I do. Well, I've got a long background in wholesale distribution and internet marketing, and then for 12 years, if you believe it or not, I've been in litigation consulting. I help pick juries, and I help companies. I'm a risk management consultant. I help companies move forward in uncertain markets, manage their risk. And that led me to meet Adam around 2015. And the way he heard me talk about risk and finance, he thought, I think you get what I'm doing, and I want to show you some things. And so since then, I've been a student of his. And then during the pandemic, he was trying to get his book, Psychological Analysis, across the finish line. And he knows
Right.
I'm a writer. And so I worked with him on that. And that was an amazing education for me. So going through that, all the questions I had about how his process worked and all this technical stuff were answered. And then I started putting it into practice. And then he encouraged me after a while to start helping him spread the message about how this works for folks.
Gotcha. So, Mike, you have any before we get into the myths, you got any questions for Shawn?
No, let's hop right in.
Okay,
Great.
cool. So, hey, let's jump in the first myth, and basically is that success in the market is reserved for mysterious people with superpowers.
Yeah.
Shawn, you often hear this from your audience. So, what's your take on this belief? What's this deal about superpowers? I mean, do I have superpowers? Do you have superpowers? What about Mike? Does he have superpowers?
So the fun thing about myths is that there's a little bit of truth to them, even when they're broadly incorrect, right? And I'll just tell a story. Like I started falling in love with music when I was in middle school. I counted my parents' record collections. I used to go around the neighborhood to my friends' parents' record collections and just couldn't get enough, right? And so for 15 years or more, I really wanted to play the guitar, but I felt like the guitar was mysterious and magic. I could never make anything of it when I picked it up. But on my 30th birthday, my wife bought me a guitar, and I had occasion when I would give the kids a bath to sit down I just set the toilet seat down and sit down and play for like half an hour with each kid playing in the bath. And during that time, I worked out some chords and some chord progressions and learned how to play some of my favorite Beatles songs. And then eventually somebody asked me, "Oh, do you play the guitar?" And my brain wanted to say no. I'm not. I've wanted to play the guitar, but my heart realized, oh, I've been playing a guitar every day for a year, and I know how to play a couple dozen songs. And what used to be mysterious to me was now something my fingers would do automatically when I would think about the chords I wanted to play. So I became a guitar player, and it wasn't magic. It was just understanding, repetition, and some intellectual curiosity and work. And then so when Adam first showed me technical patterns, right, I said, I get your mindset stuff. I get the philosophy of what we're doing. I don't imagine I'll ever be able to look at a chart and see what you see. But by being involved with it and looking for leadership and watching stocks move, all of a sudden I just saw them. Once you know what a cup and handle looks like, or once you know the difference between that bullish pennant that's downward sloping and a handle, Dennis, then you can't unsee that stuff. And then you see that you can make decisions based off of it. And then all of a sudden, I'm one of those guys that have this mysterious magical ability to look at a chart and see something there that I'm willing to make a risk decision on. And so maybe I don't feel like I developed a superpower. I just worked hard for a few years and learned it. And I think almost anyone can do that. It's not some magic thing reserved for people who are born with the force or have some sort of magic in them. They don't have to be a result of a scientific accident or Yale, for that matter, to be able to learn these things.
Yeah. And so if I understand what you're saying, then basically is that what oftentimes people misconceive as superpower is basically just ordinary, focused, concentrated, hard work to learn. And then apply what you've learned, and that repetition over and over again is what enables you look at a chart now and go, oh yeah, there's a cup and handle, or there's a double bottom, or there's a, for me, I love candlesticks. I'll go, okay,
Yeah.
that's a reversal candlestick. That's not a reversal candlestick, and everyone tells a story. So is that what? I think that's what you're saying, right?
That's a lot of what I'm saying. What's funny is too is like candlesticks at this point really just scramble my brain. Dennis, I've read your book and I've listened to you talk about them. I can see it, I can understand it, but I haven't built the natural understanding of it. I use open, high, low, close.
Sure.
For the way I do it, it works. It works for me. It has the information I'm looking for. But I know that you don't have a mysterious ability to read candlesticks. You've just done it so often that it's second nature. And as my practice develops, then I will incorporate some of that new information into my trading, right? But that's it. And I think it's what I'm really trying to do is help people who are new to it be exposed to the vocabulary and the key concepts that allow them to have a conversation. Like just a few minutes ago, we're talking about how when we form sort of a handle or that sideways flag, why that's stronger than a bullish pennant that has a slight downward slope to it. If people don't know technical trading terms, they're completely lost, and it sounds like just a foreign language. But if they listen to your podcast weekly and pick some of the leadership stocks and follow them along and watch, and then you tell them about a pennant like that or a sideways flag, all of a sudden they go, oh, I saw that. And I know, and over the course of a few cycles, then they can participate in this conversation just like us. And all of a sudden it's not magic anymore.
Cool.
Right. It's almost like if you're watching sports, right? Like you're watching baseball for the first time. Well, what's a strike? A home run? How come that guy's running back to his house, right? Like in the Sandlot.
Yeah, well, if you don't understand what the first down is in football, then none of it makes any sense. But once you understand it, then the whole game comes into view.
Yeah, it's sometimes it can be, I think sometimes when we start to develop a little bit of an expertise in whatever, it doesn't have to be just trading, but in almost everything, there's a human or a human nature type of issue where we think that just because we know it, everybody else knows it, and therefore we tend to speak at that level, and oftentimes we forget that hey, we got to make it simplified. It's just like writing. I mean, what grade level do you write for, Shawn? I mean, I've been told that we should always write for like 6th or 7th grade.
Yeah, I think that's right. I have a hard time doing that, but I try to use. I try to make a choice. I learned this from John McPhee. He's an old writer for New York, the New Yorker magazine, and he has a great book on writing. And he would take words that he thought were too big or complicated and draw a box around them in his editing, and then he'd go back through and he'd try to find a simpler word for that. So I try to make about 10% of my writing collegiate level, and the other 90% late middle school, early high school. Yeah.
Okay. Cool. Hey, Mike, can you do me a favor? When you're not speaking, can you mute your mic? Mike. There you go. But when you are going to speak, yeah, because the road noise is really noisy. Must be driving into the wind today.
Mm-hmm.
Now we got to remind Mike to turn his mic back on.
Yeah, but I think you can earn the right to be complicated if you've been simple when you're laying the foundation, right?
Okay. And so, cool. Then, yeah. So basically, what about the kind? It seems like this also kind of rolls into the area of people think, well, I'm not special. I can't succeed. But as you mentioned, the market doesn't necessarily require superpowers. It just requires a solid practicing what you're learning. And so what are the real danger of believing this myth that it takes superpowers, Shawn?
Well, the danger is that you just don't try. it keeps you from having the confidence to even try. And then as a result of that, you have to rely on people who say that they're good at it. And
Mm,
I find that the people who say that they're good at the loudest are often wrong about that, right?
really?
Well, yeah, people I think compensate for their lack of confidence with big words and bluster. And it's sometimes the loudest pundits are the ones that don't know what they're talking about, and the people who know what they're doing are usually pretty quiet about it.
So it's like maybe one thing that somebody should do is rather than listen to the Lamborghini guy, they
Yeah,
should maybe listen to the guy who drives the Toyota Camry, who's the millionaire next door, because they've basically, uh, you know, clearly following a successful path.
I think. Well, some people ask me, well, if this works, why isn't everyone doing it? And I think the answer is a lot of people just don't believe it,
Mm,
or if they do believe it, they don't think that they're qualified to do it themselves, or it's going to be too difficult, or they
sure.
don't have the smarts. And to lay the power on that superpower thing, Angela Duckworth wrote this great book called Grit. And she talked about how in the American culture, we sort of like to believe in exceptionalism, and we like to believe that we're born gifted. And
Mm,
it may be true that some people are more inclined to be musicians than others, or other people might have a physical trait that makes them eligible to be an Olympic swimmer and other people aren't. But for the vast majority of pursuits, it's actually grit. It's just the persistence and discipline of staying at something for a long time until you've mastered it that's there. And I think a lot of Americans in particular, if they're not great at it right away, then don't they don't want to pursue it. They're not willing
mm.
to suffer a few mistakes. They don't want to take a lesson. A lesson to them is the universe telling them they're bad at this, when in fact it's just
Wow.
the universe saying that they're new to it and they should try harder, right?
And that is really heavy, and that's really insightful, I believe. And I think Mike is having some technical difficulties on the road. He's trying to spin up here.
So
Mike, if you hear,
he'll chat us some questions in the private chat if he's got them. I think is what he's saying.
I'm not seeing him say anything. Anyway, because I'm just getting a spinning top when his.
Over in the private chat column, he said, "I think you have to have me backstage." So I think if Mike wants to ask a question, he can type it in the chat. I'll see it.
Think you have to have me backstage. I see. Okay.
Yeah, so he's reached a spot where his video connection's bad, but he can still connect via
Okay.
chat.
So, Mike, what questions do you have? If you hear us, Mike, just type in a question. If you're following the script.
Yeah.
So, hey, let's slide over into the concept of buy low, sell high.
Okay,
Now,
great.
okay, but now buy low, sell high. I mean, that's been advice for the market from Charles Dow. I mean, or maybe even back in the time of Newton when he did his investments uh, the tulips and all that kind of stuff and
Yeah.
lost a lot of his money.
So like I said before, that these myths all are all partially true
Okay.
sometimes, but they're conditionally not true. So one of the biggest mistakes that I see new self-guided independent traders make is they buy a stock that is down, and they think they're buying a discount, and they expect, kind of from an old buy and hold mentality, that
Yeah,
if they're
yeah.
buying it depressed at a discount, that it's going to inevitably go back up, and they're going to make a lot of money on it in time. But all too often, what happens is that stock is a loser for a reason, and it keeps on losing, and then
Mm,
they follow it down as far as it goes, and then they get in that old, I hope it's going to come back, I don't want to sell it for a loss, I'm going to wait until I at
yes,
least break even. And that's just that's just dooming yourself. That's how people blow up investment accounts, right? And
it
when I
is.
had and then when I first started buying breakouts, it felt so unnatural because I was like, well, this just had a big move up. It's obviously going to come back down. And then you watch many of them, not all of them, but often uh, it'll have a few days of digestion and then it shoots up again. Or like
Yeah.
Wingstop last year had this beautiful. You never see a rocket launch in person? In our brains, we think rockets go straight up, but they go up and then they turn and they arc and then they go sideways and diagonally for a while. I've seen stocks work just like a rocket like that.
Yeah.
And each time I'm like, I can't believe this thing has more in it. And so, but of course you can get too extended and your risk of loss can increase and you don't have a good natural level of support to put your stop in. And so all those are things to work. But so what I've to overcome that, I tell myself I don't want to buy low and sell high. I want to buy high and sell higher
Okay.
because my instinct is, oh, this thing's already up. Why would I buy something that's already up? No, it's overpriced or it's overbought. And sometimes that's true. But if I mitigate my risk, I have my stop in place, and I'm dealing with a market leader in strong market conditions, then it surprises me again and again how much legs a certain stock will have in it. And that's where most of my gains are made. I might have a portfolio of 8 to 10 positions, but you get that one that gets up past 50% sometimes, and that was the one you couldn't you just wouldn't have believed otherwise.
Yeah. Yeah. I mean, and it's kind of fun to watch that. And but yeah, that concept of and that buy high and sell higher, I think is also kind of counterintuitive. I mean, it kind of doesn't make sense
Right.
until you learn how to do it. Okay, because like I'm not a breakout trader. However, I'm not a bottom trader either. I look for the breakout, and and my research has shown me that 70% of the time there will be a pullback towards the breakout. Doesn't have to get all the way to the breakout. And sometimes that's a 3, 4, 5, 10% difference where I can basically just wait for that little pullback and then I jump on. But that's just, again, that's a style. That's, it's the science and art of swing trading. So
Yeah. And to add on to that, Dennis, I know exactly what you mean. What I've learned, sometimes I'll jump on a breakout if I think there's a good level of support for me to get in on it.
right.
But also what I'm looking for, what Adam Sarhan calls his advanced entry points. So I'm looking for something to bounce off of some support and poise itself to break through a downward trend line or past high or something that it seems poised to go. And then I know what you're saying there. Then you get that extra 3-4% in there, and then
Yeah.
when it does break out, now you're 8% up, and you can lock in your profit real quick, move your stop up, and then go for a
Exactly.
ride. Yeah.
Exactly. So, and Mike, can you jump in?
Yeah. So the question that I had for you, Shawn, I wanted to ask it before I think we hit some turbulence here on the road.
Sure.
But the question that I had, since you're earlier to the beginning of the process, how are you finding learning the quote unquote superpower? Do you find it easier to learn from books, from mentors, from coaches, from your own self studies? Well, how are you going about learning the process and developing
I
your
love that.
superpower?
Yeah, I love that question, and we just talked about it on the Right of the Chart podcast last week with Adam. And I'll go back to the guitar, right? And
Right.
I've read a lot of great books about playing guitar, and it talks about mindset and sort of philosophy of the guitar. But you cannot learn how to play the guitar from reading a book, right?
Mm.
You have
Right.
to actually pick it up and play it, and your fingers have to feel the sting of the strings, and you have to build that muscle memory to go for it. So, but that said, I've gotten a lot of valuable information from books. And Dennis, I was reading your book, and a lot of it is mindset and breaking down preconceptions about the market to get you set for it. And then you have a chapter of really specific technical things about candlestick patterns and reversals and all the
Yeah.
funny Japanese words from the history of candlesticks. And then you're like, all right, well, I'm going to have to come back and read this paragraph by paragraph while I watch charts happen, as unfold, and I can see them in real time. And that's where just following your stuff on Twitter, if you've read the book and you know to look out for these things, then you'll demonstrate, like you did on the beginning of this show. Okay, here's a bearish pattern right here, this candlestick. Now I've seen it in real time, and even if I'm not trading, I recommend everybody keep a paper trading log when they start playing around with the new system, right? But you'll know in your heart you've made this choice. Make real choices, even if you don't have real money at play. Make real choices with the information you have right now, because when you look back, it's always easier, right? And then when you do that, then you'll start to see those patterns, and then you'll know them next time you encounter them. You won't have to be told that's cup and handle. You'll know it's cup and handle, and you'll have some confidence there. And then I think you cannot. I've been lucky that one of the reasons I started working with Adam in the first place was no matter what, if we make any money together or not, I'm going to get one hell of an education with this guy, right?
Yeah.
And so I think, yes, read everything you can, be involved in some sort of practice and study where you're watching things in real time and you're actually involved with it, even if you don't have anything at risk yet, you're just symbolically doing it. But then you have to have a mentor or some sort, or if not a mentor, then other practitioners who are learning with you that you can talk about it with. And I think that's why I was excited to be on your podcast today. That's why I have a podcast, because I want a place where people can go that has sort of a guided way of looking at, here's what's happened this week, and here's some of the things that you can learn from this catalog that we've built of things that are important for this practice. So it's all three. Then you have to read. There's real value to reading. You have to practice it, and you need to have someone you can talk to about it who knows at least a little bit more than you. And that's what we're doing here. You guys know a lot more than I do. Yeah, go ahead, Mike.
That would have kept me out of trouble for the better part of a decade if I had followed that advice. Well, when I first started out, I started to read. I started to listen to the Kramer show, and that's where I started to learn about. Oh, well, if you like a stock and it goes lower, well, then the market's throwing you a sale, and you might want to buy some more. And I learned the hard way that what can happen when that goes wrong?
Right. Yeah. Sometimes the party's just over for a while.
Yeah. Sometimes the party's just over, and you end up with it's like when the supermarket throws a sale on meat. Sometimes it's getting pretty close to the expiration date, so you don't want to load up on everything that they have. Right? Yes. And then you just get home and it's a bunch of rancid stuff.
Well, and also if you're trading the way we're trading, if we're going to get into a position, I'm not going to suffer more than a 5% dip. Maybe if it's depending on where support is, I'll go out to 7, right? But I actually, because of the way I balance my portfolio, I don't like to have any more than like 3.5% of my entire portfolio at risk at any given time. Right. And so if that's going to happen, and my stops are going to be tight, then if I'm buying a loser on sale, the odds that it's going to go past my stops is really high. So even if it does go up later, I'll be on to something else, and that money's going to be invested in. You just have to buy winners. You have to buy winners that are already winning, and then win with them, and know that that's better than put your wagon to a loser.
So
that's really a great way to do it too, because if you have 3.5% of your portfolio at risk at any given time, and let's just say that every single trade generates a 3R loss, not even a 2R loss, but a 3R loss, meaning that you've lost 3 times more than you and you're still only going to be out about, well, what is that, about 11.5%? So you could come back from that.
Oh yeah, I mean how my
it's not fun, but you can come back from that.
My managed portfolio with a traditional investment house has ridiculous swings. You know?
Oh yeah.
I have it actually as a baseline. You set goals as a trader. My first goal is to not lose money. My second goal is to do better than the managed portfolio. And then the third goal is to double my money every 4 years. So
yeah, double your money every 4 years. That's an absolutely fantastic goal. I mean, that puts you about 20% per year is your objective.
That's the idea.
Okay. So
Can we go back to the first goal for just a second? Because
the first,
that first goal, I had that first goal too. I think a lot of people had that first goal as well to not lose money. But I think that I'd like to hear how you quantify it, because if you just have that goal of I'm not going to lose money, some people take that as my portfolio dropped 0.5% today. I'm selling everything, and I think that there's a balance, and you probably know that balance. So
Yeah, so the don't lose money is sort of a goal for people who are new to this,
right.
who I think when I address newcomers, there's two fears they have. One is the fear of losing money, and the other one's the fear of missing out, right?
yeah,
Yeah,
And
that's a
they're at
good one.
cross purposes, but they also both happen at the wrong times, right? People are afraid of losing money when they should actually be afraid of missing out, and they're afraid of missing out when they should actually be afraid of losing money, right?
yes,
Uh, and so it's a great way to have that conversation. But let's just say, like a good friend of mine, uh, his managed portfolio lost like 18% in 2022, and he just couldn't understand why. You know, he understood the market suffered about that, but he said he didn't understand why his money managers couldn't get out of the way of it. And I love the way he put that, right? And so for someone like him, if he had someone managing his portfolio that made a modest profit every year and on the worst years just didn't lose money, didn't lose principal for him, he'd be happy with that. And
yeah,
so uh, essentially, I've lost money when I'm at some point in the year where I have less principal than I started out with, right? And so if I take, um, I think I'm going to take a loss on SMH here this week, if not later on today, right? And but I had a tight stop on it, and I'm going to take it out. But the program is designed to absorb being wrong sometimes. Being wrong almost half of the time, right? And so you guys both know the idea is just to expose yourselves to a larger upside. And so for me, uh, that loss is a little bit of a loss. So first of all, I'm way, way up for the year. And so I haven't lost any principal in that. It was unrealized gains in the first
right,
place. And it's such a small part of my portfolio. The way I've learned to look at it is like, okay, great. They just freed up that capital for me. And now
exactly.
I'm looking at there's a couple retail restaurant stocks that I think are poised to break out. There's some financials are doing great right now. So if semiconductors are done, then good riddance. They're overbought probably already. Now there's some other more brick and mortar areas of our economy that are having a chance to breathe. And that little loss was my permission and nudge to go explore those more and find new prosperity. And then it only takes, you get into a good one and it lifts up 2-3% right away. You get in and it lifts up, you're like, oh, I've made that back. Another 2%, I can bring my stop up to break even. And now, before long, you've put it in the horizon. It's not a loss, unless you ride it down and let it kick you in the balls.
Yeah. Well, a lot of times, I in this particular area, in this particular area, is 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 I think that newer traders and even long-time traders, they get hung up with what's called recency bias. And if their most recent trade turned against them, they don't have enough data points to say, well, wait a second, or they don't go back far enough in their data points to when they had their series of winning trades and profitable trades, and they just focus on those few. And that recency bias can really kick a person to the curb and make them almost want to quit.
Yeah, and so that's where you have to pick a new mindset baseline. And I like to go back to Charlie Munger and Charlie Munger's
Mhm.
Almanac. Charlie Munger was Warren Buffett's lifetime trading partner at Berkshire
Right.
Hathaway, and they practice a completely, fundamental style of investing, completely different than what we're doing. However, um, he was a contract bridge player, the card game, right? And you have to build these contracts in your car. I don't know how to play it, but it's a complicated game. And he always said that he didn't really care if he won or lost as long as he played his hand right.
Yeah.
And I've seen people make bad choices in the market and get lucky and have some nice returns, right? But that's not going to be repeatable over time.
Exactly.
And I've made what I consider still good choices. I go back and look at the decision. I'd do it again based on the information I had. That this happened to go against me. The market conditions changed. I lost there. So even though I lost in that position, I still feel confident with my decision. And so I've sort of wandered from, I think, the question that you asked, Mike. But I guess the point there is we obviously want to win and we want to make money over time. And I think if you believe that you have a decision making matrix that will get you
Mm.
there over time, then any one particular loss or even series of losses, if you know you played your hand right, isn't really going to upset you because you know that when market, so then you decide, okay, maybe the market conditions aren't great right now.
Yeah.
Let me set up a criteria for when I will decide to turn the green light back on and get back in. And then my experience is, yeah, when the tide's coming up, your ideas work better, and all of a sudden you feel so much smarter, and the energy's back.
Yep. And
Yeah,
so,
absolutely.
and we're transitioning into the main myth that we were going to be talking about today, which is it is basically the concept of you can't time the market might actually be limiting your potential as a trader. And so let's tackle a third myth.
Yeah.
You can't trade the market. You can't time the market. This is a popular one. Basically, the investment houses just make this part of their major advertisement is, don't even try to time the market. If you're going to try to time the market, you're going to be a loser, blah, 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 blah.
Mm-hmm.
And so, Shawn, what are some of your experiences and why do you say that this is a major myth?
All right. So let's start out with what we said for each of these myths, which is that there's a little bit of truth to them, but the truth is conditional. And if you're the kind of person who isn't going to invest the time to create a discipline, to understand the market, to be able to read technical patterns, if you're not interested in staying in touch at least once a week and maintaining a watch list, then you're not going to be able to time the market. And you're probably better off to listen to the advice of someone else who's like, listen, here's a buy and hold dollar cost average strategy for you that works for most people who don't want to put in whatever amount of work it takes. And so as a general rule of thumb, if we believe that 90% or plus people don't have the discipline or the mindset to be able to do it, then that's probably sound, right? But just like we said about the superpower, if you believe that you don't have to have a superpower to learn this, and if you believe that you have the grit or the discipline or the interest to stay engaged, to watch and to learn, then I think you're going to find real quick, like if you keep that journal, your trade journal, a paper journal for an entire cycle, and you understand these concepts, I think you're going to find that nothing that happened is really surprising. Because now I'm plugged into this community of people who tweet and who blog and who podcast about this. None of us were surprised when the market corrected in July.
Right.
Could we have predicted exactly which week and which day it was going to happen? No, not reliably, but we were all prepared for it. We all had our stops set where we wanted. I think we'd all stopped taking new positions, or if we were taking modified half positions with real tight stops, and much less of our portfolio was engaged, right? And then it was on a Thursday when the market had a fall through day. It broke through a lot of the downward trend lines on the major indices. Some of them popped up above the 21-day moving average. I remember I was moving my daughter into her dorm and I looked at my phone and I was like, oh, these are the signals that I wanted for the market condition to change. I'm going to take some positions, and then I've got one negative position on my portfolio right now, And now I'm tightening them up because if Nvidia goes the wrong way or interest rates take too long, it's a little shaky out there. It's mostly strong, but it's shaky. But I'm right where I want to be. And so all that's using specific things from this last month. But the point is, we can have this conversation because we were all watching it and seeing similar things, and none of us is taken off guard. And then on the other side of it, Dennis, is if you're watching like last November, right? We'd had a summer of, we all know that it took, there were 2 other attempts at a rally that
Mhm.
failed. You can picture the charts in our mind because we were following them. We probably tried some things for those attempts and they didn't work. But then in November, do you remember it just felt different? And you
Yep.
were having lots of things break out through resistance all at the same time. And you already knew where the strength was that you want to be involved in. And then I'll bet you we were all in 2-3 weeks before the rest of the world saw that the market had woken up. And we were there.
Yep.
For me, it cost me 4% to get into that rally. And I made some heavier. I learned some things. I made
Yeah.
some heavier bets early on in those first rally attempts that I wouldn't do now. But 4%, that I made that back fast, and then had a great year. And so tell me, I didn't time the bottom and time the top. Did I get it exact? No. We're gonna get what Adam Sarhan says is the bulk of the move. We're gonna bounce. We're gonna feel our way in with some minor positions, some tight stops, and then when those work, then we're gonna pile on, and then we're gonna ride it up. And then we have a sense when everything's flying high above the 21-day moving average, and the 21-day average is flying way high above the 50, and that's way above the 200. You're extended. It doesn't mean it's going to crash right now, but you're on guard for a pullback, and you're going to watch for where are the levels of support that I'm willing to absorb, right? So
Sure.
this last drawdown, it could have kept on going. I was prepared for that, but then it gave me a signal to get back in. And so, but I'm also prepared to get out this week if everything happens, and I'll most likely have a profit for some of the things that stick. So
Yeah.
I'm not timing it perfectly. I can't, you can't catch a train by it, but it's knowing week by week what the market condition is, what it's telling you, and whether for me, Dennis, I have a green light, a red light, and a yellow light. The green light is I will take full positions with wider stops as long as I don't load. I don't like to load on so fast that I have more than 3.5% of my portfolio. I'll wait and digest it a little bit. When
Okay.
I just don't trade. Even like I was telling you, Mike, about that Oscar Health back in April, had the beautiful cup and handle pattern that I thought I think that's gonna be successful, but my light was red at the time, and I just wasn't making trades. And then when market conditions go yellow for me, then I'll make half position trades with tighter stops until I see some ideas work, and then I'll pull on in. That's just my pattern, and it looks to the outside like I'm timing the market, but for me, I'm just reading signals and making risk adjustments
Mm.
based on that. And then it looks like in the aggregate that I figured out how to loosely time the market. Whether it doesn't matter what we call it, the result's what we're looking for, right? But you can absolutely do that. It can absolutely be done if you're willing to pay attention and you know what you're looking for and you have a discipline to do it. And of course, you can resist the counterintuitive, emotional things that cause a lot of people to make very predictable, repeating mistakes.
I love that.
Yeah, very, very well said. When I remember, well, when I was taking finance classes, both in my bachelor's and in my master's, being taught that you can't time the market. Here's the random walk theory, and even the projects that we were given were based on not timing the market. So it's funny how some things that even at that level need to be unlearned in order to actually make progress and do well in the market.
Yeah, well, I mean, our first lesson in that personally was in home ownership, right? We just told the whole goal as an American is to save up and buy a home, and if you're renting, you're throwing money away. And we bought a home in 2004, and it lost 3/4 of its value over the next 4 years. And we had a growing family, and we needed to move, and the roof was leaking, and it was a bad decision for us. Now, if we had had another 15 years to stick around there, or another 10 years, we would have gotten that back maybe.
Mhm.
But that's not what we were. Our lifestyle had changed. We needed to go, and so real estate, buying your home is a great idea, is true often, but not all the time. And so my wife and I, we know what the conditions are that we want to buy property, and when those conditions aren't met, I've realized it's often a bad financial decision. It works for a lot of people because they don't have the discipline to save and invest in other places that can produce more money. Am I going to put a $300,000 deposit or a down payment on a house when I know what I could generate from that $300,000 in the market? So conventional wisdom works often for a lot of the people, but it doesn't work all the time for all the people. And part of this game is understanding when you're qualified to buck the traditional wisdom, and then it still takes some courage to do it, even though when you've done the math and it shows you're right.
Right. Very good.
So Shawn, okay, let's lay out a plan here, okay?
Yeah.
And I want you to lay out like 5 points that and I'm going to just basically say you can time the market if you 1, 2, 3, 4, 5.
So
If
if you watch it weekly,
okay,
if you learn some basic technical patterns,
okay,
if you understand the 200, the 50, and the 21-day moving average,
Roger that. Well, it's actually the 20-day moving average, but I
20-day
I
moving
don't want to
average.
correct. I don't want to correct you, but no, I'm just kidding.
Fair enough. They look real similar on my charts. That's fine. A day is not going to kill you. They look the support looks the same.
So you said the 200, the 50, and the 21, right?
That's what I have my chart set at.
Okay.
And you see, so if you understand it, and then if you understand the concept of support and resistance,
Okay.
and you develop the discipline to follow your strategy, and you can minimize the impact of emotions on your trading. So I think if you have those things set, and I honestly wouldn't encourage anyone to do it with real money until they've spent, I like to say a cycle, from a downtrend, a multi-month downward trend
Sure.
to an upturn through a peak, and then getting out of all your positions or most of your positions through your stops, allowing your stops to work, right?
Yeah.
If you can get through a cycle like that, and you didn't lose money,
Yeah.
and you probably made more than you thought, then it's up to you to determine whether you're really to put on real risk. But do that work, and if you've done that work and you can trust the system, and you've demonstrated an ability to override when your emotions want to hijack your decisions, then I think you're in the neighborhood where you can start trying this out.
Yeah, I love that. You made a comment earlier on that said, "Make real choices, even if it's with paper money." I think that is such a strong statement. And I've got my. I always love it when somebody comes on because I consider and jot down, ideas. And the other aspect is, truth is conditional, and some of these myths that we talk about, they are conditional, but at the same time, I think every trader, every person, not just in the area of trading in their life, but throughout their life, needs to challenge their beliefs, because oftentimes our beliefs are based on our biases, and our biases are sometimes not actually based on truth. But they become our strong beliefs and they become our truth. And then that can sometimes lead to some really bad decisions.
We know that old like Marine Corps march. I don't know, but I've been told, right?
Yeah.
We've been told a lot of things, and when you start watching it and working it out in real time, and what you've been told isn't what you see. I'll use an example. I'm a gardener. I have a vegetable gardener,
Sure.
and the tomatoes are a full sun crop. There's a lot of tomato farms in Florida that have full sun, right? But in
Right.
my garden, uh, the tomatoes do not like full sun. My wife told me I was blowing them up. They weren't producing the way I wanted. They didn't look good. My wife said they need more shade. It's too hot back there. I said, well, the package says they need sun. The internet says they need full sun. They need full sun. So then I took her advice and put up a shade cloth. They
Yeah.
started doing great. I was ignoring what my actual garden was telling me the tomatoes needed because I was relying on what I'd been told, right? I
Wow.
know how tomatoes behave in my garden because I've done it and I've failed with them and I've produced great tomatoes and I know the difference. So I don't care what anyone says. I don't care what conventional wisdom is. I know it works in my garden, and that I
Mm.
know, right?
Mm.
That's real wisdom right there.
Yeah. So
Yeah, nice. And so I think that's what the discipline is to pay attention, follow it, make those real choices. Be honest. Here's the last thing I want to say. I know we're wrapping up. Um, be proud of your mistakes while
mm.
you're in this learning curve, and
Yeah.
because I think there's probably 20 good mistakes in you before you're really going to hit your stride. And if you
Right.
make one, say, all right, that's number one, that's number two. And I'll give you one, like SMH, right? When the whole market woke back up and it
Right.
was breaking over the downward trend line, uh, I sort of missed SMH, got into it a couple days later just because it had been a leader. I had that recency bias, Dennis,
Right.
and I saw it was about at resistance at probably the 50-day moving average, which I knew in my heart, I was like, if I'm going to get into this, I should see if it's going to respect resistance here. It might go
Sure.
all the way back down to the 21, and then if it bounces off that, I'll pick it up. That's what I should have done. Or I should have automated the trades where it would have done that for me. But instead, I was like, well, everything else is doing great. I bet it's going to pop above the 50. I'm going to go ahead and take a position in there. It never
Yeah.
did. It didn't put its head up, and it might be down since we've been talking below the 21 now, which means I stopped out, and I knew it was the mistake when I did it. But
Mm.
I'll take the lumps. But I wanted to share that to your audience now because I think there's a lot of power in sharing. No matter how long you do something, you're still going to make a mistake every once in a while,
Oh heavens,
and
yeah.
there's so much more to be learned by the mistake than by bragging about your success.
Yeah. Yeah. Because most of the times when people brag about their success, it's the one success out of 10 failures, and sometimes, especially in trading, and that oftentimes is just to be an impressive ego type of thing. So, wow, Shawn, we covered a lot, man. I tell you, I am for both Mike and I, just such a pleasure. It was a pleasure being on your podcast, and so what I'll do is when we basically refine this and put it on the YouTube channel, and then Mike puts it up on Spotify, we'll make sure you wanted the link to your podcast. Is that what you would like to show?
Yeah. So the podcast is right of the chart. It's been on Spotify and Apple Music for more than a year now. Our
Okay.
first podcast was the end of July of 2023, and then it was originally last week in the market, but we wanted to make it more evergreen. And we
Right.
talk about how all of our profits are to the right of the chart. So we turned the format of the show around a little bit, renamed it, and then with a little bit of inspiration from you guys having success with video, we started doing the video. So the YouTube channel is brand new. And so I recorded the podcast video and edit them there for people who want to see it that way. But there's if they go to rightofthechart.com, that goes to the Substack, which is
Okay.
a blog that has links to the video podcast, the audio podcast, and other stuff that I do. So that's the best place to go to kind of follow along and keep up with what we're talking about.
Awesome.
Great.
Yeah. So, Mike, Mike, now
Yeah,
you'll be
the
back
good-
home next week, right?
I'll be back all next week, and no more road noise, no more trucks passing by.
Hmm.
Just
No more holding me hostage.
yeah, no more
Yeah,
holding
no more.
us hostage. Well, we might hold her hostage. Well, we'll see. We'll see.
And Melissa, always a pleasure. Thank you so much for everything you do. For you, you guys are a wonderful super couple. I just love the way your interaction is together, and you're doing a great job raising your young daughter. And Shawn, you also, because I know you're a proud dad of two boys, right?
No, my daughter's in college, my son's in high school. Yeah.
There you go. Yeah, well, and I know I have two grown sons, and I have let's see, 6 grandkids. Woo!
Oh,
Wow.
wow.
And spread between South Korea and Boise, Idaho.
Yeah,
So,
I found one of your sons looking for you on Twitter.
oh, really?
Yeah.
He was looking for me, or you were looking for me?
No, I just found his profile, I'm pretty sure.
Okay.
In Korea, yeah.
That's the one. So anyway, hey guys, I'm going to shut off the stream here. I just want to say, if you enjoyed this episode, make sure to subscribe. And to both the YouTube channels, Mike and I also provide a lot of great training information. And I'll put the links for our books, our separate books, in the description on the YouTube channel. And then, Mike, you just launched a new book, and the new book is called what?
The Trading Success Blueprint.
The Trading Success.
Yes, the Trading Success Blueprint. It teaches you how to write a trading business plan, because
I love that.
Most people have trading hobbies, not trading businesses, and like most hobbies, they tend to cost a lot of time and a lot of money. And in the market, we're looking to make money.
Exactly.
Not spend too much time.
And it sounds like you're helping people just make it real. And then I've got a new book coming up in about 2 weeks, and it's called. There's going to be 2 different editions. One is called the Busy Man's Guide to Successful Trading, and there will also be a Busy Ladies or Woman's Guide to Successful Stock Trading, and that'll be out in about 2 weeks. And in there, we basically cover my one main setup and trigger that is basically helped us beat the S&P for the last 13 years. So with that, I'll say aloha and God bless. Shawn, thank you.
Disclaimer, Dennis?
What's that?
Do you have to read the disclaimer, Dennis?
No.
Oh, okay, good.
So, but the disclaimer does go along the lines of everything we do is for educational purposes only, and so just remember that. So, Mike, anything?
Responsibility.
Mike?
Yep.
Is that it? Okay, I'm going to end.
That's it. Aloha, everybody.
Okay.
Thanks for
Okay,
having
hold
me
on, guys.